Your 1099 raise might be a pay cut after taxes, unless you structure it right. I'm Jeff Green, CPA at MedTax. Today, we'll unpack W-2 versus 1099 for physicians in 2025, and how to keep more of what you earn without creating audit headaches. The first decision is bigger than a headline hourly rate. As a W-2 employee, your hospital or group is subsidizing a package: the employer half of payroll taxes, part of your health insurance, retirement match, malpractice, disability, sometimes CME and licensing, maybe even paid time off. When you step into the 1099 contractor role, those costs don't disappear. They shift to you. So step one is to price your 1099 work to cover the full cost of benefits plus taxes, not just more per shift. Second is entity structure. Many independent physicians use an S-corporation once income and workflow justify it. An S-corp pays you two ways: W-2 wages for the work that you perform, and distributions for profits after that salary and expenses. The salary must be reasonable, meaning what you'd pay another physician for the same services in your market with your duties. Distributions aren't subject to the employer and employee share of Medicare taxes, which can save meaningful dollars, but only when set up correctly. Third is payroll tax planning. Social Security applies up to the 2025 wage base of $176,100. If you have multiple gigs and at least one W-2, remember, each employer must withhold to the cap on what it pays. If you end up over the cap across all of your employers, you'll get a refundable credit on your 1040 for the excess. So remember, some cash flow noise, but it isn't lost. Medicare has no cap at 1.45%, and there's also 0.9% additional Medicare tax above $250,000 in wages for joint filers. Employers start that withholding once wages exceed $200,000, regardless of your filing status. Fourth, we have reimbursements. As a W-2 employee, you might have gotten a corporate credit card for CME, licensing, mobile phone, or even a portion of home office admin tasks. As a 1099 contractor, you should put a written accountable plan in place so your corporation reimburses you for business expenses based on receipts and a clear policy. That keeps reimbursements off of your W-2 and prevents messy shareholder loan balances from accumulating. Your policy should cover CME, dues, licensing, malpractice tail, if applicable, mobile device percentage, and any home administrative use that meets the regular and exclusive use standard. Fifth is cash management and estimates. As a contractor, no one withholds taxes for you anymore. Use federal safe harbors, pay 90% 2025 taxes or 100% 2024 taxes, 110% if your prior year AGI is greater than $150,000 or $75,000 if you're married filing separate or a single filer, and make payments by the estimated payment due dates of April 15th, June 15th, September 15th, and January 15th. Use a separate savings account and move a fixed percent of your gross collections into it every time you're paid. If you operate an S-Corp, schedule monthly payroll so you don't end up making a giant salary catch up at year end without withholdings. Let me ground this with a quick case study. A hospitalist moves from W-2 to 1099 in mid-year with the same shift volume. The 1099 rate looks 20% higher, but when we price out the lost employer benefits, the self-funded malpractice, the full payroll tax exposure, and the new administrative costs, the advantage shrinks to single digits. Until we implement an S-Corp with documented reasonable comp, set an accountable plan, and align quarterly estimates, with that structure, the after-tax advantage returns and cash flows becomes predictable. The difference wasn't the label of 1099, it was the entire system behind it. Here's a quick recap of everything we just went over. Price your 1099 work to cover benefits and taxes that you used to get as a W-2 employee. Consider an S-Corp when income and admin capacity justify it. Pay a documented reasonable salary when you do so. Watch the $176,100 wage base and the 0.9% thresholds for Social Security and Medicare, respectively, and know how excess Social Security gets credited on your 1040 tax return. Use a written accountable plan and automate quarterly estimates and payroll so cash moves on schedule. When you're ready to set this up with confidence, I put everything in one place so you don't have to start from scratch. Download the Physician 1099 to S-Corp Starter Kit, link in the description. Thanks for watching. If you're a busy doctor who wants proactive tax planning, schedule a discovery call with us using the link below. I'm Jeff Green from MedTax, and I'll see you at the next one.